Hey guys, it's Aaron Page, and today I'm going to be breaking down bank statement loans for you. This is a game changer for anybody self-employed or 1099 contractors. If you've never heard of it, this is an absolute must-watch video for all your financing needs when it comes to real estate. If you've been told by a bank, credit union, lender, broker, anybody in finance that you don't qualify for a home loan because you write off too much on your tax returns, which is the number one benefit of being self-employed, you have to watch this video so you can figure out how a bank statement loan can completely change your real estate buying future. Let's start off real quick at the basics. What is a bank statement loan? And the number one thing right away, forget the tax returns entirely. I'm not even going to ask you for them. I don't need them. I don't want them. Don't send them to me because I don't care. We qualify you for a bank statement loan simply based on your bank deposits over a 3, 6, 12, or 24-month time span. The most popular is 12 months. So we take 12 months of bank statements, add up all deposits, and then we deduct out an expense factor. Normally it's 25%. It could be more in some industries. It could be less. It just depends on your line of work. We then take whatever number is left over after we deduct out the expense factor and divide that by 12, and that's how we get your usable monthly income on this loan program. Again, no tax returns. All we care about is what actually hits your account for a deposit. That's income, and we're going to use it. Let's jump into who qualifies for this and how you might be able to take advantage of this loan program. Let's start off with the first question everyone asks. What's the minimum credit score? You have to have at least a 620 credit score. You can do up to a 90% loan to value, or to flip that the other way around, minimum 10% down on this loan. But I will tell you this, if you have a 620 credit score, anywhere from a 620 to a 680, you're going to be required to put down at least 20%. If you have above a 680 credit score, the 10% down payment option is going to be available to you. Your debt to income ratio, which essentially is how much money you make compared to what debts you currently have and the proposed housing payment on the new mortgage, has to be under 55% for a bank statement loan. So quick, simple math will tell you this. If you make on paper $10,000 a month, your new house payment plus any cars, trucks, automobiles of any kind, that can be a side-by-side, a boat, doesn't matter. All of your monthly liabilities plus the proposed housing payment would have to be under $5,500, or your debt to income ratio would be over 55% in that scenario, and you would not qualify. This loan program is available for a secondary home or an investment property. If you're doing a second home or an investment property, more down payment is going to be required. You can't do 10% down on these for second homes and investment properties like you can with a conventional loan. 10% is reserved for primary residences only. In addition to just purchases, you do have the option as well to take advantage of this program on a rate and term refinance. If you bought a home with hard money or you just have a higher interest rate, you could consolidate down to a bank statement rate and term refinance. You can also do a cash out refinance as well to access some of your equity, or you can do a second mortgage that's a standalone home equity line of credit, or a home equity loan, which is a fixed second mortgage that you can't draw on. You can use your bank statements to qualify for that as well. Another popular question is, yes, you can also do interest-only payments on these as well if you wanted to, if you know you're going to be here short-term, or maybe your self-employed business is going to take you to another city and you don't want to be locked and tied down too long. You can do interest-only to save some month-over-month cash on this program as well. A question that I do get asked a lot by business owners is, why should I work with you? You have a backwards hat on and you're always wearing a hoodie, but why should I work with you? Well, simple. For the last 6 years, I've been one of the top self-employed business lenders in the entire country. I may not look like it, but I promise you I am. The numbers speak for themselves. I've done this. I'm a self-employed business lending expert. I have access to 150 different lenders that I can go to directly over the banks and the credit unions, go talk to them on your behalf, set your file up and package it to 150 different options with 150 different rates, with 150 different lending profiles and portfolios, all competing for your business to get you the best interest rate and the best fees I possibly can on these loans. I find a way to get these loans done when other banks and credit unions locally say, no, you write off too much on your tax returns, you're denied. I find a way to get it done, and I'm confident I can do it for you too. Let's get connected. If you're self-employed or a contractor and you've had any trouble in the past buying a home, reach out to me. All of my contact information is below in the description of this video. It's plastered all over my profile. I'm on every single social media platform at Your Next Lender. You can find me anywhere. DM me, call me, text me, email me, send me a fax if you want, write me a handwritten letter, whatever is easiest for you. I want to help you and show you that you can buy a home and still utilize the number one benefit of being self-employed, and that's your tax write-offs. If you guys found any of this information helpful, make sure you click the follow button or subscribe depending on what platform you're seeing this on. Share this with anybody who you think might find it helpful, and we'll see you on the next one.